Welcome to DRJLT Economics. This is the second podcast that I'm recording today, and it's on the topic of inflation. Before I start this podcast, I want to make a couple of comments with regards to the first podcast that I recorded today, which was on the topic of maneuver warfare, Russia's maneuver warfare, or the lack thereof. First comment is that I think it's called Bewegungskrieg. I think I probably said Bewegungskrieg, which was wrong. I realized this when I was typing the descriptions. Secondly, I want to say that in the modern world, Bewegungskrieg is also romanticized as Blitzkrieg. And Blitzkrieg is a word that was invented, that was coined by British tabloids. It was never referred to by Wehrmacht. So that was the second comment that I want to make. Obviously, if we understand that maneuver warfare means Blitzkrieg, it's quite obvious that Russia is not engaging in any sort of Blitzkrieg in Eastern Europe. Those are the two comments I want to make. So let's now move on to the topic of inflation. I basically in this podcast I want to ask basically two questions. First is, can recession, which is really starting to hit, stop inflation or be a control on inflation? And secondly, in whether it is going to stop inflation, what are some of the assets that could possibly be safe? Right. First, let's talk about whether recession will be able to stop inflation. I have discussed this in a previous podcast when I discussed the relative strength of the US dollar. In that podcast, I discussed three mechanisms that are available to the US government administration or the central bank, the Federal Reserve, which included, number one, of course, comparatively weak and irresponsible central banks in the Eurozone, in Britain, and in Japan, and the possibility of triggering a recession, and also the possibility of triggering a default. I think number one, that's a sure thing, because the United States, however unserious that we may think the administration is currently, and however reckless and irresponsible that the Federal Reserve has been, we must acknowledge the fact that it is not the worst. But that is already helping to prop up the US dollar. Because a lot of, I would guess that a lot of the investors are trying to exit the European financial markets, knowing that recession is going to hit, and a lot of companies are going to experience really difficult periods. It's going to be a quite long period of difficulty in Europe. A recession that I think is set in stone, and this means that a lot of investors are exiting the European financial markets, and when they exit the European financial markets, they also sell the euro to get into more fungible or more stable or safer or more responsible currency comparatively, of course, which is the USD. That's the first mechanism that's already playing a role in propping up the dollar. But inflation is still picking up speed in the United States. But now, this month, we are seeing the beginning, I think, of a collapse in the financial markets, which basically is what I said about the second mechanism, triggering this pop of the bubble. Can this work to actually prevent or stop inflation? And by stopping inflation, of course, I'm talking primarily of the United States, but of course, the US dollar being such an important currency, if inflation is low in the United States, then the contagion effect of inflation in the global economy can be more effectively controlled, right? It will be lower. So it's always something that we need to pay attention to. The Eurozone, that's structural. I don't think, even though recession is set in stone in the Eurozone, I think inflation will continue to pick up because they're ideologically driven, they're dogmatic leadership in the European Commission. They are going to basically collapse the European Union for purely, I would say, irrational hatred of course, of Russia. And however, whatever your opinion on Russia, it is unwise to harm yourself to spite Russia, and that is unfortunately the actions that are being taken by the European bureaucrats. So we are not going to discuss the inflation situation in the Eurozone. That's structural, because they're going to have exceptionally high cost of energy and raw materials, and a shrinking global market, a global market share. What that's going to do to inflation, obviously, is going to be high pressure on inflation. But for the dollar and for the global economy at large, is it possible? Well, I think there are a couple of factors, mostly one very important factor that is for this let's say motion or this proposition, and one major which is two, I think, against it. The one that is really for it is that we have been blowing up this quote unquote everything bubble for I would say the last decade and more. At least a decade of effort has been put into blowing up this bubble. And in creating this bubble, we have created basically unrealistic valuations of, as the name suggests, everything, right? Stocks are overvalued. Startups are overvalued. Products actually are overvalued. A lot of the products, used cars, right? They're overvalued. Clothes, overvalued. Especially those luxury items, overvalued. Real estate, bond markets, everything that has a price is overvalued. Perhaps with the exception, the only place where the price is not unrealistically high is in the precious metals market. Precious metals are not really high, but that is because there are consistent efforts, continual efforts, incessant efforts to suppress the precious metals market, particularly the price of silver and gold, because these precious metals are also monetary metals. They have a strong signal on the public in terms of inflation. So even though the central banks have been creating a lot of money out of thin air, this money mostly going not into the real economy, not going to the increase of productivities, but instead have been going into speculations of all kinds of assets: stocks, real estate, bonds, luxury goods, cars, etc. Now, this basically required a lot of the financial players, notably the major banks, to essentially short these monetary metals, silver and gold, by creating a lot of these paper gold, paper silver. Right? These are not backed by physical gold, not backed by physical silver, and by flooding the market with 100 times, 1,000 times the silver or gold that is physically available, they are suppressing the price artificially. That's the only place where there is not a lot of bubble. Now, but if the bubble is popped, we're going to see a lot of wealth destruction. And for those of you who have not really been paying much attention, just look at the crypto market. This week, Luna, which is a scam coin, has basically been zeroing out, right? It's going to zero. It's almost completely gone to zero now. It's less than a cent left in its current price. But of course, its value had always been zero. Value had always been zero, but the price at one point was over $130 per coin. So, that has destroyed, I don't know how many billions of dollars of artificial wealth that largely had originated from money printing, from quantitative easing. So this process can repeat across the cryptocurrencies sphere, across the bond market, across the stock market, with a lot of companies that are not making money going bust, with a lot of companies that have unrealistic valuations, a poster child of which is Tesla. They can go a lot. They can lose 90% of their market cap. Their stock price can decrease by 90%, and they can still be more than the reasonable valuation, right? 10 to 15 times P ratio. Now, what this means is that the market can destroy a lot of the money that had been created, and this could actually, in theory, reduce the money that's in circulation, that is available to chase after goods. And I think this actually is going to reduce inflation. I firmly believe that this is part of the reason that the Federal Reserve and perhaps also the US government, the administration, have been so complacent about raising interest rate. Perhaps they have been anticipating at the right moment to collapse the financial market. Because if you have to weigh the two evils, one is collapsing the financial market, but of course the financial market, the system can be preserved, and prices can rise again in the future. And in this process, people who have a lot of money will be able to chew up a lot of the shares of valuable companies, of valuable assets, and they will then be able to, in the next cycle, control a larger share of the economy. Sounds pretty good. The other evil is to keep printing money to prop up the financial markets, but eventually the financial market this printing will go into hyperinflation, and at that point, the financial market, without the system being collapsed, the financial markets denominated by a collapsed money, by a collapsed dollar, by a worthless piece of paper, does not exist, cannot function either. So the question is really lose one or lose both. And I think they are trying to pop the bubble. I think right now, people who are investing, especially in real estate, I think they are taking a lot of risks now. But at the same time, there's an argument against, two arguments against the possibility of using recession to control inflation. First is that there are, at least in some administrations, in some governments, there could be an urge to print money, to loosen monetary policy, to loosen the fiscal policy in order to stimulate growth, economic growth. So that is a doctrine I think does not work. I think it has never worked. Monetary simulation doesn't work. Fiscal simulation works a little bit, but still not at a time when there is high inflation. So that's my assessment. But I think some companies, some countries will do it. In particular, I think China will probably do it, and this is going to be very disastrous for the Chinese economy, for the living standards of the Chinese people, because that will basically mean that there is going to be high levels of inflation, but with high and rising inflation, but there will not be a lot of corresponding economic growth when adjusted for inflation, because printing money doesn't really work. Fiscal policy does work a little bit, but when there is high inflation, really, I think it's more important to control inflation than it is to stimulate growth with fiscal policies. That's my opinion. I think the United States, it's uncertain. It's quite uncertain because on the one hand, there are some elements in the administration who really want to continue to avoid, at least statistically, a recession. Basically, they have one quarter in the red. If the next quarter they can say that there is an economic growth, they can prevent the hat or the badge of recession going into midterm elections. So that's one consideration. But on the other hand, they also want to get inflation under control, because they have put themselves in this difficult situation when there is both a specter of recession and a worsening inflation crisis. There is really no good monetary or fiscal policy that any government can do. The best, most responsible governments should have prevented any sort of inflation crisis, right? Recession, if it's temporary, it's okay. Have a temporary recession of a few months, of a couple of quarters, a year or two, that is fine. You let the economy adjust and then you move forward. But if you go into this inflation spiral, you risk the entire system, and then you will not be able to save your economy from recession either. But anyway, that's the first argument against it. The second argument against this recession being able to save the global economy, or in particular the American economy, from inflation, is that a lot of the leaders, a lot of the people in charge are incompetent, right? There could be a recession, and without any stupid maneuvers, maybe inflation could be under control. But if these people are so ideologically driven, so dogmatic, that they want to cut some major suppliers or major player, let's say, some major players of the global economy off their part of the economy, that will basically mean that there will be structural inflation, right? Because let's say, for example, let's just say an example. If I don't think this will necessarily happen, it probably won't, but if the United States and its allies say, we now sanction China, we stop doing any business whatsoever with China, well, that means that inflation will be so bad that there will be triple digits. It will not be double digits. There will probably be triple digit inflation in the United States. It's going to be very, very horrifying. Obviously, I'm not saying that it's going to be good for China, but that's a separate discussion. So what I'm saying here is that the leadership is so bad that they can make some mistakes that, can actually make inflation worse while having a recession. So that is the first part of this podcast, discussing whether recession will be able to save the economy, global economy, from the inflation crisis. The second part, I just want to say make a couple of very brief comments, actually, with regards to two asset classes, right? One is real estate, the second is gold. Real estate, I think, is not safe. The first comment I want to make is that real estate is not safe, whether recession will be able to control inflation or not. Because if a recession is able to control inflation, that's actually very bad for real estate, because with recession there will be higher unemployment, and with an increase in borrowing costs, in loan costs, mortgage rates, I think real estate prices will actually come down. So it's not really a safe haven. I'm not saying that people who own real estate are going to lose their property, but what I'm saying is that people who don't own real estate, going into a bubbly market at this moment, at this point in time, with the hope of preserving wealth, I think it's probably not going to work out very well. Real estate is also not good if inflation continues to be high despite a recession, which basically means a stagflation. In that situation, we're going to see inflation continue to rise. The rate of inflation, when the rate of inflation reaches 20%, 30%, which basically means entering hyperinflationary territory, real estate will collapse, because a lot of the older people, a lot of people on fixed incomes, and also a lot of people who are on relatively modest incomes may have to sell their property in order to fund their lifestyle, right? They may need to sell their property in order to buy some food, in order to rent perhaps a smaller apartment and then heat it up, to heat it during winter. These necessities always come before any ownership of any asset. So I think when the inflation gets high and when the economy continues to be bad, otherwise known as stagflation, real estate market is going to collapse, and it's actually going to be worse. Maybe not worse, but it's not going to be good. Right? It's not going to be good. So then the second thing I want to talk about is gold. I think if a recession will be able to save the global economy from the current inflation crisis, gold is not a good bet. If that is true, gold is not a good bet. Why? Because in that case, inflation will be modest, perhaps even negative, because when all the markets collapses, let's imagine cryptocurrency 99%, stock market 90%, right? Real estate 80%. If that is taken out, what will be left? Is it inflation or is it deflation? In that situation, perhaps it's not so good to hold gold. And then on the flip side, if inflation is not under control, if there is a stagflation situation, oh yeah, gold is perhaps the one thing that you want to hold next to silver. Silver and gold, those are the things that you want to hold. Perhaps one thing above that will be a farm, small farm. You get yourself a small farm. You plant some vegetables. You raise some animals, some chicken, and you drill yourself a well. Perhaps, or maybe you have your farm next to some spring or whatever water source. That's obviously is more important than holding gold and silver. But after that, gold and silver, and perhaps then, if you are in the United States, protected by the Second Amendment, get yourself armed, right? So that's those are some of the things that I think perhaps will play out. All right, this is the second podcast that I record today. Thank you very much for listening. And I want to point out, obviously, that this podcast is posted on YouTube, Odyssey, and Rumble. And that I have a Telegram channel, the link of which I will post in the description box. Thank you very much, and have a great day.